I have a really crazy idea for this portfolio.
Now we're talking.
So I've had some pretty big changes financially in the last month because I closed on a small business in Houston at long last. It's a cleaning service business, specifically in the steam and carpet cleaning niche. And so far, so good. We're about a week in as of the filming of this video, and it's been really nice to have cash flow on day one. But it's been a big financial focus of mine to both find and close and now run this small business as I look to move forward in my financial future. So in the meantime, I haven't been paying very much attention to this portfolio, at least like I was many months ago. So I have an idea for what I'd like to discuss. But before that, let's take a look at the performance. Let's get rid of this ugly all-time view. We don't need to see that, because if we go to the month view, hey, it's another big month in this very strange market where you have lots of volatility. So we're up about 8% on a money-weighted basis over the last month. Granted, I haven't added very much money to this portfolio. I've actually been adding it to pay down margin. I'll get back to that in a moment. But anyways, we can see every single holding over the last month is green, which I don't know the last time if that's ever happened in the history of this portfolio. So that's kind of interesting considering the economic situation we're in. But the biggest gainer by far in my portfolio was Alibaba at nearly a 30% gain over the last month, which is a pretty spectacular rise. I've had a lot of positive news in recent weeks, and that has spurred a lot of growth in the stock price. A lot of the swings we've seen in Alibaba over the last couple of years have been pretty sentiment oriented, not too much to do with fundamentals, at least most of the time. At least that's what it seems like. It's a lot of sentiment with what's going on with China and US-China relationships and all sorts of things having to do with the regime, which are valid concerns, of course, but it's pretty hard to predict, so you've seen lots of weird swings, this being another one of those. But I had some other pretty big gainers in the portfolio as well, including Smith & Wesson, Meta, and Sleep Number, all up around 15% over the last month, so very substantial gains. And again, every other holding was green, even if just barely for some of them, still a very unusual sight, at least given the past couple of years. And I did mention that I am focusing quite a bit on paying down my margin. If we go over here to the Borrow tab, I used margin to buy lots of things over the last year. Mainly this was for my down payment for my house and the rehab associated with that as well, depending on how you want to account for it. That was back in July through, we'll call it September, when I got a new house down here in Houston, moved down here. Lots of money was being spent in rehabbing the house, and that's now behind us, but I didn't want to tie up a ton of cash paying back this margin until after I closed on my business here in Houston. But we are closed now, so now I think it's a good time to start paying back this margin, and my goal is to clear all of this, if not the vast majority of what's left, by the time we get to next month. As you can see, just in the past couple of days, I paid off almost half the margin, actually over half the margin, so we're off to a good start there. And I could always redraw this money if I really wanted to, but I'm going to try to avoid using margin because I have a lot of other debts to pay off in the meantime, so a lot of my energy is going to be used towards deleveraging rather than re-leveraging if I can help it. And that is kind of a big if, because if I find a really great deal and it makes sense to take out more debt again, then I'll do it, but I'm trying to pump the brakes as much as I can while I try and get a nice foundation set. As I just closed on this business, want to make sure everything's stable, and I want to clear some of that debt in the meantime to give myself some more breathing room. But anyways, back to the portfolio. What should I do here? Here's an idea I've been thinking of. Call it crazy. I called it crazy towards the beginning of this episode, but I'm considering consolidating this portfolio down to 1, 2, maybe 3 holdings and just leaving it there. And the reason I'm considering doing this is because each of these individual holdings really is very small compared to the amount of money I just put at risk for the business I just bought. And for comparison, I just put about $180,000 into a business that I am now the owner and really right now the general manager. I'm looking to hire a general manager right now, but I'm still going to be working a lot in this business even after I hire this manager. So it's going to take a lot of my time, and I've already put way more money at risk than all of these little holdings that might be $5,000 to up to $12,000 or $11,500 in the case of Equity Commonwealth, which really is more of a cash position anyways. My point is, each of these individual holdings isn't really moving the needle all that much. It might have a while ago when I didn't have as much income coming in, when I didn't have as much invested in other things like other properties and now this business. Maybe it made more sense that a $10,000 position would be pretty material, but I don't really think it is at this point. And that's because I've shifted my focus in investing towards producing more income, towards the offensive side of investing. I would consider this portfolio a lot more defensive when it comes to trying to preserve my wealth, grow it with inflation and beyond, ideally over time. So you're making some incremental gains over the long term. Those compound, all the great stuff we're all familiar with. But I'm really trying to focus on income in the meantime so that I have more income to then invest more defensively, if that makes sense. And even if one of these $10,000 positions produces a 15% per year return over the long term, which would be a really great result, am I really going to get that excited when it was just off of a $10,000 investment when I could have used those $10,000 to potentially buy another van for the business, like a work van that could be used to drive a lot more income, at least much more than the 15% return that I might expect on a really well-performing stock. But the other issue I've been alluding to is position sizing. And the reason that's an issue is because of a little something called return on invested brain damage, that term coined by Bill Ackman, at least I think it was coined by him. That's where I first heard about it. And what I mean by return on invested brain damage is you have to factor in the mental cost of a particular position, and you have to determine then, is that mental cost of holding the position worth the potential payoff? And as a brief example, let's take a look at this Seritage position down here. It's less than $5,000, but I would probably put a lot of the same mental energy that I might put towards a $10,000 position like Foot Locker or Turtle Beach up here, even though logically speaking, I should put more weight towards these bigger positions. And I do put slightly more weight mentally towards these things, but once you have a holding in the portfolio, at least in a pretty concentrated portfolio like this, it's hard to ignore any one holding. And the stress of seeing a holding move up and down, potentially very rapidly, is something you have to deal with. You have to keep up with the news if you're trying to stay on top of the thing. And it doesn't seem to scale proportionally to the size of the individual holding. So with that said, I'm considering consolidating this portfolio down to just a few holdings, and that includes all of my taxable stock holdings, including the few that I have outside of this portfolio. I think the biggest position outside of this portfolio is Pershing Square, which is Bill Ackman's fund, speak of the devil, and that's close to a $15,000 position. And after I would have consolidated the portfolio, I'd have an extra incentive to pay attention to those now larger holdings, and I would have potentially less stress because I have less holdings just to think about. Even if they would have been small holdings before, I'm still thinking about them. They still take up limited mental energy and mental space because there's always more things to deal with. And right now, I think my mental energy is best spent towards other things than some of these smaller holdings especially, but even some of the larger ones, it might make sense just to consolidate them down to a few. And I'll throw out a bonus idea as well, because it's something that might happen in the coming year. If I decide that I want to buy another business or reinvest a bunch of money into my existing business, it might make some sense to sell off all of my taxable stock holdings rather than hold them and leverage them like I have been doing in the past. But it might just make some more sense to sell off everything, get rid of all that stress from that portfolio, and just focus on the issue at hand, which would be either taking down another business or reinvesting that money into the existing business effectively. Not saying I will go that far, but it is something that I am considering for the future. And then once my income is potentially much higher, I could then focus much more on defense again, buying more stocks, buying more real estate, and all that great stuff. Again, not saying I will actually sell everything off, but I do want to keep my options open, and I don't want to pretend like I'm locked into any one method. So anyways, that's my crazy idea. I'm considering consolidating this portfolio down very significantly, down to 1, 2, 3 holdings or something like that. Are there any holdings that you think are worth consolidating into, and are there any that you think should go first? I'd be curious on what you guys think about that in the comments below. Not saying I'll actually go forward with your recommendations, but I think it'd be good for a discussion. Anyway, subscribe so you don't miss next month's episode, and until next time, take care.